So you're not investing in a project, you are providing what we call the exit liquidity for insiders who were there before you. Trading and crypto will not make you wealthy. Not charts, not signals, not the next crypto launching next Tuesday. Are you paying attention? I'm saying that you have 100% chance of making more money if you invest for more than 4 years into Bitcoin. And that window is open right now, but not forever, of course. Trading will not replace your income. It will consume what is left of your time, your attention, and your peace. Trading and crypto will not make you wealthy. Not charts, not signals, not the next crypto launching next Tuesday. In this video, I will show you exactly why 94% of active traders lose money and why the one boring, unsexy, passive strategy has outperformed every hedge fund, every financial advisor, every trading system, and every crypto project over the last decade. If you understand this today, you will never waste another second wondering whether you should trade, which crypto to buy, or whether you missed your window. I hold the first master degree in international wealth management in France, and I am a certified financial advisor. I have spent years inside the traditional financial system and years studying what actually beat it. Nevertheless, my videos are purely educative and do not constitute financial advice. If you are here, it is because you are smart enough to know that leaving 100,000 in a savings account, it's not a strategy, but every time that you try to understand what to do, instead, the world hands you chaos, trading screens, crypto coins with cartoon dogs on them, influencers promising 50% per month or 70% per month, guaranteed. You are intelligent, you are disciplined, you have built something real. But the financial world feels designed to exclude you, to keep you overwhelmed, second guessing and doing nothing. That's not your fault. When nobody gave you a clear system, the system was never built to serve you. By the way, if we have never met, I am Appel GRATUIT. I help entrepreneurs and coach build long-term sovereign wealth through Bitcoin and international wealth management strategies. And on this channel, I show you how to move from financial chaos to calm, structured, and lasting independence. So now let me show you something. 94%. That is the percentage of active traders who lose money over a 12-month period, according to a pre-reviewed study published in the Journal of Finance, analyzing more than 60,000 trading accounts. So it's not only beginners traders, not only retails, it's all active traders. And another study from the University of California, Berkeley, Brad Barber and Terence Oden tracked 78,000 investors, found that those who traded the most earned 7% less annually than those who traded the least. So the more you trade, the less you make. That is not an opinion, that is replicated academic data. So now let's talk about crypto. Between 2021 and 2023, more than $2 trillion of market capitalization was destroyed across crypto projects. Luna, gone in 72 hours. FTX, gone. Celsius, gone. Billions of real people's real savings, gone. And you know what survived? Bitcoin. Not because it is exciting, because it is structurally different from everything else in the crypto space. As you might know, Bitcoin has no CEO, no marketing team, no token supply controlled by insiders, no venture capital round that gets liquidated onto retail buyers or beginners like you. Bitcoin is a fixed monetary protocol, the only one. There will be only ever 21 million Bitcoin in existence forever in human history, and more than 19 million are already in circulation. So this is not just another coin. This is not a project. This is a monetary system. And the simplest way to build a position in this system over time with zero stress is to consistently accumulate small fraction of it. So by the way, if you want help understanding this, you can just follow me on Instagram and LinkedIn, where I post daily. The link is in the description. Let's continue. The second thing, and this is where it changes everything. Trading is not a wealth strategy. It's like a second job, really. Think about what trading actually requires. You need to watch screens for hours a day. You need to understand technical analysis, order books, liquidity levels, macro news flows, and earning reports. You need the emotional discipline to not panic sell when a position moves against you, which statistically it will. And also statistically, we are human beings, so we are emotional creatures, so you will also make the wrong decision. And you need to be faster than algorithm running at 400 microseconds. You are basically playing a game against computers, and you need to be right consistently, better than institutional desk with 200 PhD and servers positions there meters from the exchange. You already have a business. You already have clients. You already have a life, right? Trading will not replace your income. It will consume what is left of your time, your attention, and your peace. And I believe that we are here because we have a purpose, a life mission. So your time and energy will be better with your clients or with your future clients than behind a trading screen. And if you want to make more money, just learn how to monetize what gives you energy. Monetize what your passion is, what is your genius zone. So I want you now to just take a moment and take a deep breath and just close your eyes just for a second. Imagine a life where you get paid to do what gives you dopamine. You get paid to help people on the subject you are the most passionate about. And that's possible. That's what I do right now. Being a Bitcoin coach does not exist. I invented this job for myself. And if you are an employee, listen even more carefully. Because I started as a financial advisor, an insurance broker after my master's degrees. And I was living at the border with Switzerland, and I had to be stuck in traffic every day to go to this job. It was horrible. I was doing cold calling, explaining life insurance and retirement to people who did not want to hear about that. Even though, you know, in Switzerland, if you don't do your retirement with your savings and investment, you just get nothing for retirement, so you're screwed. But anyway, after 3 months in this job, I quit and I decided to follow my intuition, to study and teach Bitcoin for more than a year for free, because at the time I didn't know that in life we could get paid to do what we love. I had to do a big self-development program called Quantum Leap, where I worked on myself, I healed some wounds, and I also paid a business mentor who taught me everything that I'm doing to get me to where I am today, living off my life mission and my passion. So it's absolutely possible for you as well. So now let's talk about altcoin and the rest of the crypto market, because I am against crypto, and it might sound crazy to you if that's the first time that you see a video of me. I am against crypto because between 2017 and 2026, 99% of all the cryptocurrencies that have been created in 2017 have lost more than 90% of their value, or they disappeared with the money of investors entirely. So those numbers come from CoinMarketCap, historical data, and it's cross-referenced with archive market cap rankings. CoinMarketCap is a website that is well known in the space. And so it's not just volatility, you know, it's not just the price going up and down like Bitcoin. No. We're talking about structural capital destruction or stealing. In my opinion, this is stealing. So altcoins, so everything that is not Bitcoin, altcoins have specific, so it can be Ethereum, XRP, Solana, you name them. But altcoins have a specific design feature that most beginners like you never discover. They have enormous insider pre-allocation. So the founders, venture capital firms, and early investors control between 30 to 80% of the crypto supply before launch. So it means that Ethereum, that is the second largest cryptocurrency, had 60% of the supply already in the hands of the founders and co-founders and the small circle of people around the project. And then they launched the project, and of course, you know what happened. The supply gets sold methodically, sometimes legally, invisibly into the beginners retail market. So the demand is created by marketing, influencers, and manufactured hype. So you're not investing in a project, you are providing what we call the exit liquidity for insiders who were there before you. So for example, if Vitalik Buterin sell some Ethereum, or someone in the team sell some Ethereum that they had for free, they are using you as the exit liquidity. You are providing them an exit and making them richer and you poorer. But back to you, if nothing changes and if you stay confused, overwhelmed, and occasionally tempted by the next crypto narrative or the AI bots or other MLM project, you will keep doing nothing or losing time and money, while inflation is also removing 10% of your purchasing power every year if you don't do anything also. And that's 10,000, 20,000 of real money, of your money, quietly disappearing from your savings annually. You don't feel it, you don't see it, zero noise, zero headlines in the news, zero accountability for the part of the people creating that inflation, aka the banks and the government. Or worse, you start trading, or you tell yourself that you will start trading, so it keeps you in that loop where you have an excuse to not really take action. Either you continue losing because this is a small amount, or you lose big and you choose to completely close the chapter, telling yourself that investing is not for you, and you spend the next 20 years working harder in your job, trying to maintain your lifestyle instead of building smarter. But I hope that what you want is different. You want a position that works for you, a strategy that works for you while you sleep. You want your money to respect your hard work, accumulating quietly, growing structurally, requiring nothing from you after the system is set. What you want is a feeling of checking your account and feeling calm. Not feeling anxious, not feeling confused, but feeling calm. That is what this is actually about. In a moment, I will show you exactly the passive system that has outperformed again 99% of all financial professionals over the last 10 years. And this is exactly where most people get it completely wrong. Again, my name is Appel GRATUIT. I'm your wealth educator. I hold the first master degree in international wealth management in France. I am a certified financial advisor. I have spoken at Tesla, the University of Geneva, and private Swiss banks. And I created the Bitcoin Premium investment program to help entrepreneurs and professionals like you reclaim full control of their wealth. And I have built also a lovely community where we meet online every week. So yeah. Back to the video. Here's how you start. There's 3 steps, okay? Step 1, you decide your monthly allocation. So you do your budget. I hope you're doing it already. If you're not, that's the kind of thing we're doing in the community as well. You do your budgeting every month. With your budget, you know exactly how much money you can save aside. And in that money, you decide an amount that you will invest every month. Not a big lump sum, but a fixed recurring amount that you will move into fraction of Bitcoin every single month, regardless of the price. So let's say you decide to go with 400 euro per month. That number is not really what matters. What matters is the consistency. This strategy is called dollar cost averaging, or DCA. You can take a notebook and a pen and take some notes in this video because I'm giving everything, okay? There is no secret. With this strategy, you're not trying to time the market like people do with trading. You are removing time entirely and you buy the same amount every month, which means that you automatically buy a fraction of Bitcoin. When prices are low, you are accumulating more fraction of Bitcoin. And when price is high, you are accumulating a little bit less fraction of Bitcoin, but you are in the market. So yeah, you understood me correctly, I hope. you're going to set an automatic wire transfer from your bank account to a broker. I like to use Rien because of their Swiss quality and secrecy. And the broker will send your fraction directly into your Bitbox key. And if you want to do this strategy alone, you will have a link in the description as well. It looks like this, okay? So every month you will receive your fraction into this key. So it's not going to be on an exchange, it's not going to be on Binance, it's not going to be even on Montpellier. Montpellier will only be the broker. They will buy the fraction of Bitcoin for you and send it to your key. So this way, you don't need to spend any time, maybe 1 hour per month, just to check your key and listen to 1 or 2 of my videos to increase your education and understanding of Bitcoin. But this is optional. Over time, your average cost smooths out. The data on this is very clear. A 4-year DCA into Bitcoin has never resulted in a loss at any entry points in Bitcoin's entire history. Every single 4-year rolling window has been profitable. So that's not me giving you a promise, that is historical record. Are you paying attention? I'm saying that you have 100% chance of making more money if you invest for more than 4 years into Bitcoin. And if you don't invest, listen carefully as well, and you can watch on my website. I have developed a specific app for you to see it. If you don't invest in Bitcoin and you keep your money in your savings account, you have a 100% chance of losing money because of inflation. So as I see it, you don't really have a choice, but let's continue. The step 2 is to use a regulated non-custodial setup. You buy a fraction of Bitcoin through a regulated platform, not a random app, not an exchange registered in the Cayman Islands that will disappear anytime soon. You move those fractions into a cold storage, a hardware wallet. You hold it physically in your hands. When your fractions are in cold storage, they are outside of the banking system. They are not even connected to the internet. There is no institution to hold them. There is no bank that can lend them. There is no platform that can freeze them. You hold the keys, you hold the WAF. Step 3, do nothing else. Super important. Do nothing else. Do not check the price every day. Do not react to headlines and the news. Do not sell when volatility hits. And it will hit in both ways, because some people are scared when it's low, but they will also want to sell so much when it's high. So that's also the risk. The system works precisely because you stay consistent through the noise. This is not passive in the lazy sense, this is passive in the strategic sense. You make one decision and the structure does the rest. So if you are getting value from this, just comment system in the comment section. I will send you the most important video I ever done. Normally it's reserved to my paid community, where I show you the full system step by step, including the exact platform I use and how to set up the cold storage correctly and automatically. Just comment system and I will send you this very important video that is not on YouTube. So here's the truth. It is not about finding the right trade or the right crypto coin at the right moment. It's about owning a piece of the only monetary asset in history with a mathematical fixed supply and never selling it. Exactly how your grandparents kept their gold and passed it on to the next generation. And you know, in trading and crypto, you trace returns, you burn time, you carry anxiety, and the insiders take the other side of the trade. But in this new system, in the Bitcoin system, you accumulate a small fraction of Bitcoin on a fixed schedule for example, €400 a month. You hold them in cold storage with the Bitbox key. You let time and scarcity do what no trader has ever been able to manufacture, which is structural, compounding, irreversible appreciation. So time, scarcity, consistency buy you freedom. Michael Saylor did not build a position in Bitcoin by trading it. Warren Buffett built generational wealth not by moving in and out of position, but by buying quality assets and holding them for decades. The principle is the same here. The asset is new, but the logic is very ancient. So for those who don't know, Warren Buffett is considered the best investor in modern history. And Warren Buffett spent decades telling the world to diversify. Don't put all your eggs in one basket. Spread the risk. That is what every banker, every financial advisor, every textbook has repeated for 50 years. But then I like to say, don't listen to what they say, look what they do. And Warren Buffett put 50%, so half of his entire investment portfolio into one single stock. I will let you guess. What is that stock? Maybe you're using one of the products looking at this video. It was Apple. So not because he stopped believing in discipline, but because he finally understood what diversification actually does. In practice, it forces you to sell your winner to buy the loser or to buy the losers. So think about what diversification would have looked like in 2010 in the smartphone market. You want exposure to mobile technology, okay? So you spread the risk. You buy Nokia, you buy Motorola stock, you buy BlackBerry stocks, you buy maybe Sony, you buy all market leaders in 2010. It's logical choices, it's diversified like your banker would say, and you watch every single one of them go to zero. While the person who put everything into one stock, Apple, the one everyone called the reckless, quietly built generational wealth. And that's exactly what is happening in the crypto space today. When someone tells you to diversify across Ethereum, XRP, Solana, and the next promising project, they are describing the smartphone market in 2010. Multiple competitors, multiple narratives, multiple teams promising they have the better technology, and there's only ever going to be one, Bitcoin. And again, not because Bitcoin is the most exciting, not because it has the best marketing. They have no marketing because there is no company behind, but because it is the only one to solve the problem permanently with creating for the first time a fixed supply. There is no CEO, there is no investors who need an exit. There is no foundation like the Ethereum Foundation in Switzerland. Bitcoin is a protocol. There is no venture capital round being liquidated onto you, retail buyers or beginners. So every other project, crypto project, is like Nokia or BlackBerry in 2010. It can be impressive for a moment, but then it's replaced and forgotten. So Bitcoin is not competing even with Ethereum and Solana the way Apple competed with Nokia, because Bitcoin is not even in the same category. That's why I say that I'm against crypto and I only talk about Bitcoin. It's not a tech product trying to win a market. It's a monetary infrastructure by itself. The same way the internet is not competing with website. In that analogy, the websites are the other cryptos who can be frozen and disappear and inflate to zero, and the internet is Bitcoin, a protocol nobody can control or destroy it. Buffett did not diversify across the best smartphone brands. He waited until he saw something irreversible and then he concentrated. So that's not recklessness. That is the highest form of financial discipline. You do not need to own every crypto. You need to own a fraction of the only one that cannot be copied, cannot be shut down, and cannot be printed into irrelevance. And that window is open right now, but not forever, of course. Between 2017 and 2026, Bitcoin's annualized return was approximately 70% per year, compared to 8% in the S&P 500. The stock market, and not a single year of consistent DCA over a 4-year rolling window produced a negative return. Not one. So that's not just luck, that's arithmetic of scarcity meeting consistent demand. And almost nobody explained it this way, because trading platforms make money when you trade. Banks make money when you stay in their products and in their banks. The system is not designed for you to design a financial independence. It's designed for you to be financially dependent. And this is how you move from financial anxiety to financial certainty with buying a fraction of Bitcoin over time. So now you know exactly why trading destroys time, why crypto projects destroy capital, and why one passive structured consistent position in fraction of Bitcoin has outperformed everything else without requiring a single hour of your attention after the system is set up. So if you want to go further, the next step is simple. You can book a free 10-minute call with me. The link is in the description. We look at your specific situation, okay? your timeline, your questions, and I show you exactly what a clean, structured starting position could look like for you. You don't have to stay confused, you don't have to stay behind, and please do not stay stuck. Okay, you can take control starting today. And if you're here, most probably you like personal development like me, and maybe you are into spirituality and religion. So if you are still not convinced about Bitcoin, here is something nobody in finance will ever tell you. It was when I used to be doing in-person event last year in Geneva, Switzerland, every month for free. People could come to my events and get some financial education and Bitcoin knowledge and all of that. And I did a big conference about money and religion, money and spirituality. And what I found out is that every major wisdom tradition in human history, Christianity, Islam, Judaism, Buddhism, Stoicism, arrived at the same conclusion about debt. Debt is a form of slavery, and debt is everywhere outside of Bitcoin. Everywhere. When you buy property with a bank leverage, you are using debt. In Islam, it's called riba. When you are trading with leverage or with money off the platform, you are using debt. When you are investing in crypto that have the power to change the supply, so making money on money and enslaving or making poor everyone else that has this token, this is an equivalent of debt. The Bible calls charging interest on the poor an act of exploitation. The proverb says directly, a false balance is an abomination. The Islamic tradition goes further. The Quran declares war on debt, war on riba, which is the practice of making money from money itself, so trading, but everything that has a form of debt. So it's not just metaphorically, it's literally, because a debt-based enrichment, profiting without creating real value, was understood for thousands of years as a moral corruption from the heart, not a financial risk. We're not even talking about financial strategy here, but a moral duty to create value and not just trade or do things related to debt. But yet the entire monetary financial system is built exactly on this. Every euro that you have on your bank account was created and is created with debt. Maybe you don't know it, but the bank created the money the moment you signed the loan. They charge you interest on something they just created, and your savings are the same. Every time you deposit €1 in your bank account, the bank gives itself the power, so the debt power, to create €9 out of this €1. And then they will lend this money against an interest that you pay, and they will also invest part of that money that will give them 8% per year as profit, as interest, and they will give you only 1 or 2%, or sometimes even like in Switzerland 0%. Moreover, they use your money to finance industries you have never chosen, and they do what you never voted for. This is not a conspiracy, it's public knowledge. It's just that I dig this subject deep enough, and you can if you want. But this is how the system is designed, okay? And trading is the same logic, taking to its extreme. Making money from money. There is no creation of value, there is no work, there is no product, there is just speed, asymmetric information, and the quiet transfer of wealth from those who do not understand the game to those who build the table in the first place. This is a stealing transfer of energy. But gold has been the answer for the last 5,000 of years. You buy it, you hold it, you do not trade it, you do not lend it, it cannot be printed, it cannot be created from nothing. It is honest money because it required real energy, real labor, and real time to produce. And becoming richer through your work, saving in gold, is accepted by religion like Islam and Christianity. Even though, and that's my opinion, that the gold market is deeply manipulated by the Bullions Bank of London, and the supply of gold is also controlled to not destroy the price, because yes, we have an insane capacity to create more gold and therefore create inflation also in gold. So by definition, the gold supply is not limited. We globally on Earth mine around 2% of new gold every year. So there is actually an inflation rate on gold. And Bitcoin is the first asset in the digital age that shares this property even better. It is a fixed supply. I'm gonna repeat it. It is a real fixed supply. There is no central insurer, there is no debt, there is no counterparty. You buy fraction, you hold them, you let time and scarcity do what compound interest does for the banks. Except this time, it works for you and there is no debt. So researchers, for example, in every religion, as we speak, are learning and having an opinion on Bitcoin. In Islam, for example, more and more intellectuals say that Bitcoin is the best form of money ever created. In the Christian community, we have a beautiful book called Thanks God for Bitcoin, and that goes also into these principles. So the ancient wisdom was never anti-wealth. It was anti-extraction and anti-stealing. There's a profound difference between accumulating real value over time and profiting from the desperation of others. Fraction of Bitcoin held in cold storage, bought consistently over years, is the closest thing the modern world has to what every tradition called honest money. Not because it is spiritual, but because it is true. If you are ready to be unplugged and embrace the orange peel, I will see you in the next video. And as always, it was a pleasure to serve you. Take care, my friend. See you in the next one.